My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, Bob Mortgage Nation? This is the 77th episode of the Mortgage Report. All right, so what are we talking about in the Mortgage Report? Well, we're talking about interest rates, what's happening in the political climate, and how it impacts the bond market, the stock market, and what my lock or float position is for the week. This is a weekly video, so follow me on Instagram, instagram.com/BobMortgage. You'll start to see in my stories daily activity if it's changing or influencing any way, shape, or form my lock or float position for the week. So this is Friday. Let's take a look at what's happening. The bond market, or the stock market, actually, got a little bit of reprieve today, but it was a pretty brutal week. Okay, the stock, like Tuesday or Wednesday, Thursday of this past week, it was not like down 1,350 points. Okay, and President Trump, basically blamed the stock market sell-off on the Fed increasing interest rates. Now on Friday, we did get to see a little bit of reprieve. We were up at the high about 400 points, 414 points. We ended up closing the day just above 270 points. So we got a little bit of that. And so that's also a little bit of a concern for me because we didn't weaken going into the weekend. The stock market held strong. So a little bit of concerns for the bonds at this point. Now, as it relates to kind of what's coming up, so a lot of it's going to depend, like the stock market, on the traders and how they're really going to be seeing and hearing the CEOs talk about their earnings, the wages, and the impacts of tariffs on their bottom line, their numbers. So if they feel it's good, then that's obviously going to continue a stock market rally. But if the CFOs and CEOs have kind of planned that, they've kind of been baking in some of those numbers a little bit, then we may see a bit of a weakening sell-off in the stock market because they don't know what's going to happen really with interest rates and the tariffs, and that kind of becomes our concern on what's happening with the stocks and with earnings, wages, and tariffs, is who's going to win, the bulls or the bears at this point. So kind of leading into all that, guys, right now the market, while we finished strong, we had a little bit of a decline in the bond market on Friday, as you can see the numbers here. So if we look at where we were, guys, with a 1,350 point shortage in the fall in the Dow, you would have expected us to have a much bigger pickup this week in the bond market, which would have reduced interest rates. But as you see, we didn't really get a very large pickup at all, and we gave it all back on Friday. And you can see my concern here. We have a large gap to the positive, but we also have a large gap to the negative. So the bond market does have the potential to fall all the way down here to 99.719. So with that, guys, what I did was I had contracts. We had contracts coming in all day on Friday, and I talked to those clients. And while I was in a carefully floating position, I told them, I said, look, here's the thing. We got to pick up the last couple of days, so you're getting the positive gains from that. Let's go ahead and take those gains, lock in the interest rates, because we're going into a weekend. Stocks had a really good day on Friday. We don't know what's going to happen coming out of that weekend and how the stock market's going to react. We have too much risk to the downside, and that interest rates could rise as the bond market falls. Let's take what we have. I'm comfortable with it. They were comfortable with it, so I advised them to lock. Now, for new contracts coming in Monday going forward, I'm going to be in a carefully floating position to see how the market reacts on Monday, depending on the amount of time they have between their contract date and their closing date. So if they're short windows, 9, 12, 15 days, which is typically the space that I play in, quick turn times on my closings, then I may just go ahead and keep them in a locking position. If we have a little bit more time to run, we'll have a little bit more time to play and start listening to what the traders and the analysts are saying about corporate earnings, wages, and how they're feeling about the tariffs. So again, we were carefully floating last week. I converted to a locking position for those with contracts in on this Friday. We're going to continue in a locking position over the weekend, and then we'll wait and see what happens on Monday for new contracts. We'll look at floating those. while we kind of see what's happening with some of those traders and everything. So all in all, good week. My digits will pop up. Look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. Watch the markets daily, just like this, to make sure that I can get you the right home loan at the right price. All right, with Bob Mortgage, your dream loan is already within your reach.